How have ETFs and flows reacted, James?
Yeah, so unsurprisingly, China's focused ETFs have seen flows basically follow headlines and what's going on with the trade deal. Early this year, when Trump was delaying deadlines, we saw money trickle in. When he started ramping up his rhetoric again and ramping up tariffs, we saw money flow and pour out of Chinese ETFs. China started talking about retaliating tariffs, more money poured out. And then that changed in September of this year. Money started to trickle in as there was talk of a deal going underway again.
So let's talk about which ETFs this works for and which ETFs this doesn't work for.
Yeah, so this is basically good for the U.S. equity markets, emerging markets, equity markets in general. So up until this year, we've seen kind of this risk-off sentiment through August where fixed income ETFs were dominating the flows over equity ETFs. And that doesn't really happen very often at all. So basically, we're seeing a changing of the tide. Now, ETFs that aren't benefiting from this, we've seen specifically gold ETFs, treasury ETFs, low vol, min vol ETFs. Those ETFs have been dominating in flows and performance has been pretty well for them. If you look at min vol specifically, that category of investing has taken in more assets than pretty much anything else in the ETF landscape. And for the first time in November, we saw outflows there. And all three of those categories for the first time all year have seen outflows so far in November. So we're kind of seeing a change of sentiment here to a little more risk on. The other thing that's pretty bad, there's a trade war ETF actually out there that basically tries to invest in companies that can handle trade war policies the best. So this is obviously a bad thing for that ETF and performance-wise. And
James, just flows generally this week, how have they been?
Flows generally this week have been pretty positive, but if you look at specifically the performance of different Chinese ETFs, they've been taking in money. We expect money to pour in if this deal actually does get done, but you need to be careful on which ETFs you're investing in. So if you look at different Chinese ETFs, so the FXI, which is typically what you look at in the Chinese equity market, it's vastly underperformed the S&P 500. But if you look at the A-share market, which is a little different, more mainland Chinese investors, it's actually outperformed the S&P 500. So we expect those funds to be top of mind over the coming days.